So here we go. Yet another Saturday evening session. We are on the 4th of May, Saturday, 5 p.m. as always. And the first few minutes, we're going to take a closer look at the Nifty and the various sectoral indices. I have the weekly, daily 125-minute time frame, 3 time frames on my screen here. And for the Nifty, it was quite an interesting session. Well, if you take a look at the weekly time frame, we have a positive Heikin-Ashi and we have a move to an all-time high, just teased to an all-time high. And what we experienced yesterday's trade was a significant outside bar, slipping significant from its intraday highs, creating a huge outside bar to the length of the daily range, expanding 2 standard deviation. And it brings doubt to a trader's mind is whether this kind of a move is sustainable or not. Now, as I've been repetitively sharing with you, that we know that the weekly momentum has been, slowing down, and for the month, 2.5 months, we've seen sharp falls, equally sharp rise to a new high, failure, sharp sell-off, equally sharp high, new high. Now, is this going to be a failure? Now, looking at the weekly charts, looking at this combination, looking at the way the other readings are playing out, there is a possibility that this can yet turn out to be a failure. There's no second thoughts about it. Yes, it can. The point is, beyond which point will we call it a failure? Number one, of course, Friday's low will be important. Friday's high will be very important from a positive point of view. And Friday's low also will be important from a bearish point of view. The index needs to break below that, stay below that, and then some kind of downsides open up. What I can see on my 125-minute time frame has been a sharp sell-off. And there has been a short-term trend reversal and momentum reversal. And any kind of a pullback from here on can only give opportunities on the downside. This is not a bearish market. But this is not the bullish market, which is a sustained bullish market. Everything is happening too quick. The downsides are also happening too quick. The upsides are also happening too quick. And so, as a trader, especially as a momentum trader, we also have to be equally quick. If not, slightly quicker. We need to get out of the trade before it surprises us. And we also have to kind of preempt the direction and get on board before the move shapes up. Not easy, but who said trading will be easy? So what's the view on the Nifty? Let's continue to say cautiously bullish. That's because the trend reading, the momentum reading on the daily chart is still bullish. Cautiously because, of course, the momentum on the weekly chart is slowing down. There are signs of momentum divergences. We have a sharp sell-off and a huge outside bar. After such a huge 2 standard deviation move on the daily range, it is very likely that next 1 or 2 days is going to slow down. We have to look for those slowdowns. Will they offer an opportunity to go short or not? All right. If we want to take a look at the sectoral indices, I'll drag the stock charts page wherein I have the RRG graphs with the CNX 500 on the weekly time frame. And I'm going to reduce the tail length to 1 first. Let's quickly take a look at what happened last week. So from the gaining point of view, it was the Fin. The Bajaj Finance and Bajaj Finserv's sharp sell-off and equally sharp gap ups created a lot of drama in this pack. Chola Fin was exceptionally strong. We saw that rally. Auto continues to lead. I'm really impressed by Auto and Realty, but Auto more so. Bank Nifty also did fairly well. These are the 3 sectors which were up more than 1%. And then we have a little bit of mid cap, the consumer durables, the metals, 500, okay, metals, this much. Out of which, ones that stands out are these 3. The one which were weaker, media. Now, you know that I'm not a big fan or a follower of this media pack. I don't like to trade them or track them that much. So 3% down. IT. Problem. IT has been a problem sector for some time now. It's going to take some time. I don't think it's going to reverse in a hurry. Though Tech Mahindra reversed really well, But the rest, the Infosys, the TCS, the Wipros, I think will take a little bit of time. Then we have the Realty, small cap, FMCG. So nothing much. You can see that the mid ones, these nothing much to take away as a sign of positive or negative. It's what we can take away from last week's gains or losses is number one, IT continues to stand out as the weakling, and auto continues to stand out as the one of the strongest sectors in the market right now. And Fin and Bank Nifty has picked up. Now I would like to extend or reiterate from the last 2 Saturdays discussions like these, when I was saying that if the Nifty has to sustain, if the Nifty has to go back to an all-time high, then the financials and Bank Nifty has to kick in, and they have kicked in. So that's a good thing. Now we'll take a look at, we'll increase the tail length. We're going to increase the tail length to around 12 weeks. It's around 3 months. Let's fit it. I'll just animate a little bit just to see how well the RRG graphs have been following this clockwise direction. That's where IT and that's where media is. And these are the ones which are weakening. So let's now sort the tail. We want to sort the tail, and we want to find out which are the ones which are in the leading quadrant. See, the number of sectors in the leading quadrant are reducing. Few of them are going down to the weakening. See, 4 sectors over here which are in the weakening. And already weakened, lagging are already 4 sectors over here, which is media, FMCG, IT and the mid caps. So let's start with the strongest. Over the last 3 months, as you can clearly see, CNX Auto stands out, Metal stands out, Consumer Durables and the others, but these 2 are the biggest gainers. Auto, in terms of RRG graphs, right up there, right in the leading quadrant, slowing down a little bit, but nothing much to worry. Let me take a look at metals also, much stronger than auto. It's angling up, it's gaining horizontal grounds as well as vertical grounds. Now, if we take a look at auto and metal index on our charts, yeah, right up there. The good thing about auto sector is it does not allow me any scope to analyze much. I don't have much to say apart from the fact it's still strong. There are no signs of divergences, nothing to worry. So it doesn't allow me to spend much time analyzing the auto. There's no reason you should short it, the CNX auto at this juncture. If it gives us some reading, I'll definitely let you know. The other one was metals, and metals also has not been allowing me or giving me any much scope to talk about. Weekly charts exceptionally strong, nothing much that I can take away. Daily chart, what I have found very interesting was the low of Friday, Thursday and Wednesday. All these 3 days, the lows was very, very close, if not almost identical. Not much in terms of momentum readings, been little erratic. Gone sideways and consolidating after this particular breakout. Yes, it's not a breakout failure at all, just a consolidation. Generally, most of the times, these consolidations should pick up on the upside. Generally, you never know. So, if we see a break below these 3 lows, these lows, then we might see a retest of around 9K from 9200 to 9K. Don't try to short auto or metal at this juncture unless that particular stock's chart is very weak. The sectoral charts are not weak at all. So I will not be looking to short either of these 2 unless that particular stock's chart is very weak. Going back to the RRG graphs, then you have the consumer durables. Now consumer durables is right here, and if I animate the consumer durables, you will see that it has moved very, very limited zone. It has stayed within this area. It's not weakened, it's not given back a significant relative strength. Neither has been, it has fallen vertically, which is loss of momentum. It's been very restrictive. So what does it mean if we take a look at the consumer durables on our charts? If we open the Nifty consumer durables now pretty strong weekly charts. There's nothing much to talk about here. Decently strong daily chart, a big, not outside bar, but a big legged Heikanshi on my daily time frame, which is fine. It is kinds of resonates with the Nifty chart. So strong. There's no particular reasons to go bearish over here. In the past, whenever it has corrected, it has created some 3 or 4 or 1 or 2 1, 2 or 4 weeks of negativity, and it's not given a significant two-legged correction yet. So nothing much to worry as of now. So consumer durables, metals, auto, there's no sign of weakness per se. Going back to the RRG graphs, now let's come to the quadrant which I personally like a lot, which is the the improving. And in the improving, we have Fin, we have the Bank Nifty, we have the Nifty because we are doing it vis-a-vis CNX 500, that's why Nifty is there. But Fin and Bank Nifty. Now, you know what I'm going to say next is I like this in the improving quadrant because these two combined will have 40% of your market weightage wise. It matters. It can do a lot of good. So let's take a look at the Bank Nifty. Bank Nifty had a breakout, throwback, retest of the averages and another breakout, which looks like this on the daily chart. The first breakout, the second breakout, sharp sell-off. So if you are an active trader, you know that one stock was down 4-5%. At the same day, the other stock was up equally 3-4%. We had days when Axis was the loser and iBank was the gainer, and just the opposite after two days. So it's not been a one-way move for the Bank Nifty. If you and I are trading the banking or the financials, we have to be bloody good in our stock picking. It is the stock identification that is going to be more important than the sectoral identification. It's always good to have a view on the sector, but the banks and the financials are jumbled up. It's mixed up. It will not be easy to find. Take a look at the finance. So, okay, before I go to the CNX Finance, which will be more or less very, very similar. Pretty strong weekly chart, honestly, even after yesterday's volatility, choppiness, sell-off. There's not much of a weakness. If you have a run-up like this, don't you think you should allow the market to even slow down and retrace 30, 40, even 50% retracement? It's normal. So there's no negativity in the Bank Nifty. CNX Finance also will more or less show similar kind of reading. So if we see the overall markets, if we see the Nifty recovering itself from Friday's huge range, and if it doesn't fall too much and it tends to contain itself more or less here, I think banks will play a role. I continue to repeat this. This probably is the 4th week I've been saying this. Let's see. Now the weakening. This is where your oil and gas comes into place. This is where your realty comes into place. This is where your healthcare and your small cap comes into play. All of these were your exceptionally strong sectors, especially your small cap and your mid cap has been one hell of a ride, right? You don't get to see these kind of outperformance from the small and mid caps every year. This comes once in 7-8 years. So let's quickly take a look at the small cap and mid cap. So small cap is at a life high. It has given a big move. It is holding well. It's a big outside bar. Looks fine, but relative wise in terms of CNX 500, it is slowing down. Absolute terms not, relative terms slowing down. Mid cap slowdown is relatively stronger. You can see the momentum reading on the mid cap has been slowing down for quite some time. Now, I would like to focus just a couple of minutes on the mid cap more than the small cap. The reason one is on the RRG graphs, the mid cap is essentially on the lagging quadrant. The small cap is on the weakening quadrant. In simple language, this means that mid cap is relatively more weaker than the small cap, with CNX 500 as the base. Now coming to the absolute chart, this divergence, this slant divergence on the mid cap's weekly chart is very interesting. When I say interesting, what I mean is for any kind of a contrarian trader or any kind of a trader who's looking to go or preempt a short, if you ask me, I would definitely look at the top 10-15 mid cap stocks which are there in the FNO list, in the derivatives list. And if I would like to see which kind of stocks are resonating this kind of reading, whether they are liquid enough or not. If they are not liquid enough, I'm not interested. Most of the top 10-15 names will be liquid enough. So quality of the stocks will not be an issue. I will be looking to see whether this kind of a behavior is resonating amongst those names or not. So even if I don't have a thematic or a theme or a sector to go short on, I might have a mid cap, and within the mid caps, the top 15 names, I'll definitely will be taking a look at it over the next day or so. So mid cap is weakening, so we need to be careful. Small cap is relatively better. Oil and gas and realty. Oil and gas over here, I have it as energy, CNX energy. Now CNX energy had given us a breakout, and it's just about there. Reading wise, fairly strong trend. Momentum slowing down. This leg is not backed by momentum, so this is something one should keep back of his mind. OMCs have done phenomenal. Reliance has sold off. NTPC, the Coal India. So I have all of them added over here. Energy, which is the power as well as the fuels. Bearish, no. Strongly bullish, neither. So yeah, stocks selective. Like we had, identified the OMCs last week. We have to be very careful with the particular stock. And then pharma. This is going to be another interesting counter, and quite difficult also, because this is what is pharma is doing. Whenever you see a market like this, the best thing is to do nothing. Honestly, if you ask me, I don't want to do anything. No, not even bullish, not even bearish. Depending on your trading style. My trading style is look for a trend, look for a pullback and go long or go short. The problem with pharma is by the time it goes into an uptrend and gives me a pullback, the uptrend is over. By the time it falls and gives me a pullback, the downtrend is over. So there's nothing much left for me to make use of these short-term trend gyrations. So if you are a breakout trader or you're a pullback trader like me, avoid. Simply. However, if you have a slightly contra side to yourself in your trading style, then look for some shorting opportunities on the top, then you look for some long opportunities at the bottom, which I don't specialize on and I don't use them too frequently. If you've understood my underlying meaning or statement, if you are of a contra nature in your trading, look for shorts. That's it. And lastly, media, forget it. FMCG, struggling, IT. So IT and FMCG. Out of this, we can clearly see IT has been struggling for quite some time. There it goes, and it's been hovering there, but then it completely left. And over the last 1, 2, 3, 4, 5, 6, 7, 8, around 8 weeks, which is 2 months, it's completely given back. FMCG I will not take too much time to analyze this, just like auto and realty, stay away. FMCG has gone fairly volatile and erratic over the last couple of months, more than couple of months, 3 months, 3 to 4 months. The good thing is the recent move. This particular move has again taken the sector to an uptrend and slowing down. Range has expanded. I'm going to stay away. What I would like to see is stability of this particular trend. This trend, I'm calling this an uptrend. I need to see some stability, which never came here or here. It never came. Downside, I'm not too keen because downsides have led to breakdowns and bounce backs. So I'm clearly avoiding those who, you join my weekday live classes and you know that I've been staying away from FMCG. Next and last is IT. Straight away you can see some drawings on my weekly chart, which is essentially I've marked this high and would like to see whether prices respect this or not. I'm not a big trend line, I don't draw trend lines, but by the very look of it, I knew that if I draw a trend line there, it will more or less come there. So I just was giving it a shot, and it came right away there. A parallel channel, I just feel like drawing here just to see. Yeah, so more or less, does these channels allow me standard deviation? Do they? No, they don't. Okay. So perceived supports, trend down, strong momentum, not much of a divergence kicking in down there. Daily struggling, all the time frames are struggling. Is it weak? Yes. Is it a good time to short? No. Is it a good time to go long? No. Why not short? Because it has already fallen too much. Your risk reward will not fit. Why not long? Because there's not enough evidence. Even on the lower time frames, there's not much of an evidence. So stay away from IT, but keep an eye for a bounce back. I don't think it's going to happen immediately. Eventually, yes. I don't know how much time it will take. It can come in a matter of 2 weeks or it can come after 2 months. But when it comes, I'll definitely let you know. And that's where you will get some good risk reward in your favor. The upsides possibility will be much higher than the downsides in terms of possibility, probability, and even in size, in terms of the size of the move. Lesser to lose, relatively much more to gain. But it's not ready. So be careful next week, trade accordingly. If you ask me, I will of course run my scanners a little later tonight. Not tonight, tomorrow. And I'll be closely looking at the mid caps, few of the top mid cap names, to see if there's any sign of a weakness in any of these names or not. Chaliye, that brings an end to our usual market sectoral analysis. Now let me quickly take a look at the chat box and take a look at your questions. We will update our sheet also and look for some opportunities for next week.